All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Shelley Van. Shelley, how you doing?
I'm doing well, thank you. How are you?
I'm good. Welcome back to the show.
Thank you. It's cold today in this office.
Yes, and cold outside.
Yes.
Yeah. Other than that, you're well.
I'm good.
Good. I'm excited to have you back. We have a lot to talk about today on the heels of a new kind of content product that we sent out. If you're on the Tasty Crypto email newsletter and you receive Next to Orange, our email every Saturday morning, well, we have a little surprise for you. We have expanded the content, sending out a midweek market update, kind of data-driven. I would compare it for those in Tasty Nation that are familiar with cherry picks. I would compare it to that in some ways. You know, we're trying to take that kind of data-driven approach. But we're going to talk about some of that today. If you didn't get this email, you want to get on the newsletter list, you want to start to receive some of our content, go over to tastycrypto.com and you can sign up, or you can hit the sign up link, tastycrypto.com/newsletter. right there in the chat. Before we get into what's going on in the market, nice bounce in Bitcoin and elsewhere here today, Shelley, and talk about what we see and what we wrote about in that email. We got to first shout out the chat.
Absolutely. What is up, chat? I have a very weird question to throw.
For the chat?
Oh, yeah.
Okay. Scared me for a second.
Oh, no, it's for you too. And this is a shout out to my sister because our father has a very noteworthy sneeze.
Okay.
And like it
shakes the windows?
Oh, it shakes the whole block. There'll be like neighbors down the street if he sneezes. Oh, bless you. So we were trying to spell the sound of his sneeze because it's very, very distinct, like S-S-U, but like his whole body's involved. But so this is how my brain works. I'm a weirdo. We know this by now. Tasty Nation may not know, but you know, hello. I have been in the office now for like 3 months-ish.
Yeah.
3.5 months.
Yeah.
And someone over on the trading desk side has a very funny sneeze, and it's like an ee-hoo. So as people sneeze, I've been like writing them down. Weird. So I want to know in chat.
How many have you written down?
Like 5 or 6.
Okay. So there's, yeah, I mean, everyone has a distinct sneeze.
Yeah. So I want you to think about like, how would you spell the sound of your sneeze? But chat, I want to know
It's a tough one.
How you spell your sneeze.
Okay. How you spell your sneeze. I love it.
There's a very classic achoo over on the trading desk as well.
Ooh.
I know. Like now I need to match who's sneezing, whose sneeze spelling goes to which person.
Yeah, we're going to quiz you.
Yeah.
It's good to have you back on the show. I like when you're here, your whole family shows up in the chat, all your friends from all over the internet. Everybody's here. So shout out to, I guess, Shelley's network.
Oh, thank you.
Yes.
Thank you.
Where do you want to go today? We've got Bitcoin at 99.6. It feels like 2 days ago we were worried about this going to 75. Less concerned today. ETH back at 3,400. Solana's back above 200, just barely, but up 8% today. We're feeling better, I think, than at least compared to yesterday.
I think so. And I'm excited to get into what you've created or continue to create because I've been in crypto for about 5 years. And so after coming off of the Where Do You Start series with Katie, I was like, well, I started 5 years ago, but I would not say that I know much about how to do this the right way or in an intelligent way. I'm a very apey squirrel.
Okay, yeah, I want to ask you, what do you mean by do this the right way?
Okay,
like,
so,
how do you think about it?
Like trading crypto. My approach has been truly degen style, like, ooh, that looks cool, I want it. I'll jump in, learn about it later. And I've been lucky over the course of my time in crypto, but to do it with more of a formulaic approach or just any sort of intelligence, now that I've been here working with you, seeing what you put into these charts, I'll be honest, I look at them and I'm like, yeah, cool, but I don't know what I'm looking at. So I really want to understand how, where do I start? How do I smart? That's where
I like that. Okay.
That's where I'm at.
Let's jump into the email that we just sent out, I think about an hour or so ago, because this is going to have some of that data in it. It's got some of the charts that you're referring to. There's a bit more that we talk about or go through, I think, on Options Trading Concepts Live on Monday during the crypto edition of the show. A bit more that we include in some of our weekly emails as well. But let's jump over to that. And here's the email, just to pull it up on the screen. This is our market update. I want to point out a couple of the tables in here that we start to look at. And I want to talk through how you can use this as we go through the email. You can use this for market awareness. And that's really the concept that we're going to hit on today. When you talk about how to do this, I mean, there's this, obviously, this approach to risk management that you need to be aware of. What that means to me is taking profits at the right time and making sure you don't just ride it up, full circle all the way back down to the beginning where we were kind of at the cycle. But there's also, the awareness that you need beyond just like taking profits or cutting losers, but the market awareness that you need to understand kind of what's happening in the space, right? And that could be anything from, is it a market that's being dominated by Bitcoin flows, ETF flows, and that's where you want to be positioned, or is now the time to get into some smaller microcap, market cap stuff? Volatility plays into that as well. And I want to talk about how, some things relate to, at least in terms of the price action that we see in the market, they relate to what's happening in other markets when we think about assets. So let's walk through some of that. Stop me at any point. I've talked to Katie about this as well, because I think it is a key component when you're getting started. It's like, how do I think about the market? How do you put context or perspective around some of these price changes?
Real quick, one dashboard, quick look at the big picture.
Yes, and that's what we're trying to do here. It's a work in progress, and I think the approach is always evolving. It has to be, given the nature of crypto. But this is how I think about just high-level market awareness right now. We have, 6 tokens that are up here on the screen. Represents some of the assets that you can trade through the Tasty Trade brokerage, as well as Solana, which hopefully is available at some point in the near future. But these are the ones that we're looking at for that reason. Also, just simply looking at Bitcoin, ETH, Solana, Doge, more popular tokens, but certainly Bitcoin and ETH being the bigger market caps, really the market when I think about it in that sense. So the first thing that I want to be aware of is just what's the price momentum, or what's the price change on a weekly basis, but more so, 1 month, multi-month, just over these different time frames, what's going on. If you look at something on a minute-to-minute basis or hour-to-hour even, there's going to be a lot of noise. There's going to be some noise when you look at this on a weekly basis, but when you're looking at this on a 3-month or 6-month time horizon, you can remove some of that and you get a much better sense of what the trend is. Mm-hmm. What I've found in crypto, when you look at Bitcoin, it's true. There are 4-year cycles. At least that's how it's played out previously. And so as a result of that, in crypto, I think you want to stay on the right side of the trend. That's what works for me. It doesn't mean that you can't take a contrarian approach, or that you wouldn't be selling this recent rip higher up into 100,000. And maybe it does pull back. But I've just found it a lot easier in this asset, which for most people, it's kind of long only. There are ways you can short it. You can use derivatives. But for most people, they're kind of buying this and they're holding it and they have a long-term view.
Okay.
So
the
you
chart,
want to be on the right side of the trend.
Correct. But so tell me what these colors mean over on the right.
So on the right-hand side, what we're looking at is price momentum. And we're measuring that price momentum very simply by looking at exponential moving averages. So what is the average price over certain periods of time? And then looking at that across different time horizons. So if we look at that on a short-term time horizon, we're going to have a bit more noise. That trend or that signal is going to flip more frequently versus weekly or monthly. But when we look at where we are relative to those averages, are you above, below, or kind of right there as they're crossing over, you can drive bullish, neutral, or bearish signals. So if we have an idea of what the average price is over a certain period of time, and we look at where we are here relative to that, or more so when those averages, as we kind of zoom into this, start to cross over, we can drive signals for when it's bullish right now or it's bearish. And in bullish environments, I want to buy dips and I want to take some profits at the top of different trading ranges, but I feel a lot more comfortable buying those dips. Where in a clearly bearish environment, bearish trend, you're going to see a lot of rallies that are sold off. There's going to be larger downside moves. Whether you're short the market or not, it's a lot tougher to buy the dips in that market. You might see some big bounces. Quite often those are, as we like to call them, dead cat bounces.
Okay, wait. You said it's a lot more difficult to buy the dips during a bear market?
Yes.
But isn't that a big dip to then purchase?
It is, but I guess the equivalent would be we're at 100,000 and all the signals are as bearish as they can be. You go down to 75, you bounce up to 85 on your way to 50. You can trade within that on both sides in the same way that you could sell this rally here today. That said, this has been a much easier market, arguably, to buy dips in because it's been going up consistently, hitting a series of new all-time highs more recently. But the trend has been a series of higher lows and higher highs up and to the right. Hard to short that. You might be able to make some profits if you quickly cover on those pullbacks. And if you were short, let's say, the end of last week into Monday, you had a good trade. But if you were thinking that that was going to break down further to some larger move materializing to say 75, well, you're short if you didn't cover and we're back at 100. This is just an easier market because it's a very bullish trend at the moment to buy the dips in. If you go back to a good chunk of 2023, really hard to do that until about October.
Right.
A market that was kind of going sideways, wasn't really going anywhere. More so, if you go back to post-FTX collapse, you would have seen all of these signals were bright red. Really hard to buy the dip. Now, if you can buy the dip and you can hold it and stomach the volatility over multiple years or longer time frames, in Bitcoin, that has worked really well. But as a trade, it doesn't work so well because now your trade turns into a much longer time horizon.
Got it.
So the first thing I look at is just simply what is the trend over different periods of time, and then what is the price momentum. And I get those signals from looking at exponential moving average crossovers. If we jump back to, let me get the charts back up here just 1 second. Let me pull this back up. Got to kind of jump between two browsers. If we can pull up our TradingView chart, and we're working to bring a lot of this to the Tasty Trade platform. We use TradingView because there's a lot of different things we can do with it. It makes it easier for me with crypto specifically to kind of bounce around. But here's what those moving averages look like when we put them on the screen. I'll look at ETH, for example. So we've noticed that Bitcoin on the prior slide or in the email is neutral momentum right now. It's shifting from a bearish signal where we started to see that break down, and this is where on those shorter time frames you do have some noise. It's shifting back to neutral. We're not seeing that here with ETH. We have the bars colored red because we're still underneath those exponential moving averages. And if I kind of zoom in here, you can see what I'm talking about. Here's those averages. Mm-hmm. These are slim ribbons. This is something that in TradingView you can add on your charts. You can tweak the different time frames. You'll be able to add this at some point soon in Tasty Trade. But this is where I get these signals from. Steve Miller, Slim, he was on the Tasty Trade Network, or Tasty Live Network, long time ago. He's got some popular technical analysis tools, different studies that you can add to your charts. And so this is one that I've just always liked to use. And it simply has kept me on the right side of the trend. And I think that's, again, really important with something like Bitcoin. If I show you, or with ETH, or with crypto in general, and you can apply this to anything, but let's just look at this on a 1 month basis because it's a lot easier to understand, why you want to be on that trend longer term.
Well, let me stop you. You said you can do this with anything.
Yeah.
What about a new coin if you don't have a lot of data already?
Yeah, with something that's brand new, you're not going to be able to look at this across longer time frames. So all you're going to have to work with is obviously the price history that you have. So let's just jump down to the bottom of this watch list that I've put together. Let's look at AI XBT. This is a AI agent token, we can't really look at this beyond a daily time frame where there's any signal, because here you can see it's only been around since, call it December, end of November. We look at this on a daily basis, we have a signal, but it's kind of just gone up. Look at this on a 4-hour basis, you have a little bit more noise, and you got a recent kind of bullish signal. So when I look at these things, if we go back to ETH or even Bitcoin on a longer term time horizon, this is where, if I go to the 1 month, it really kind of helps, again, to stay on the right side of that trend. This is a market where you were rewarded for buying dips. As soon as you got that long-term monthly signal and momentum was positive here, we can see that, you wanted to be buying dips. Now you have to time it, and you've got to look at those shorter time frames when you're up here and this is a bit extended, and you can kind of at times just eye it up and see how much above those averages the price currently is, because it usually doesn't extend too far. I mean, sometimes things just go straight up, but over, it would be odd to see a multi-year period where it's just straight up every single year, never pulled back. But that's how I use this. You can get chopped up. There is noise. It's not perfect, but I want to understand, and more so across multiple time frames, what's the trend? And so when I look at Ethereum on a monthly basis, structurally bullish, I'm comfortable there. I look at this on a weekly basis. You can see there were different points in time. If you went short here, you very quickly saw a reversal. But if you went short when it was bullish previously, you were able to hold that, and you stayed in those trades for the better part of a year. Where you're shorting this and you're looking to sell any rally in there. Whereas when you're in a bullish environment, as we are currently, you're looking to buy dips, it's much harder to short.
Okay.
So that is a ton to just say, be on the right side of the trend.
So easy.
Yeah.
So in your table then, at a quick glance, when I see green on the screen.
Yeah, let me jump back over to that.
There we go.
Yeah.
That tells me, okay, buy dips.
It tells me, or it should tell you, that you're in an environment where, if we think about this in terms of probabilities, I would assign a higher probability to this continuing to trend higher until you start to see a breakdown in those signals. You will not be able to time it perfectly, but you want to manage risk in that sense. You want to notice when there's been some sort of transition. We thought everything was very bullish, and then very quickly we started to see that deteriorate for one reason or another. Recognize that when those signals are bearish, you probably then want to lighten up on some of your positions. Maybe it reverses. But I've found with currency trading, with crypto trading, and the stock trading as well, you really want to be on the right side of the trend.
Okay.
Doesn't matter as much with options, and maybe with the leverage involved with futures, there's more kind of range-bound trading options or opportunities. But again, with crypto, kind of buy and hold sort of trade for most people, this is helpful.
Awesome.
Now let's talk a little bit about volatility. So how do you trade within that trend? And this is another important component of this. We're going to put these numbers out 3 times a week now. We've currently been doing it on Mondays and on the weekend. But what we do here, Shelley, is we create an expected move or estimated trading range based on the implied volatility, what the options market is pricing in terms of expectations is probably the best way to look at that, and the current underlying price. So given an implied volatility of 61% annualized for Bitcoin and a spot price of 99,000, what is a one standard deviation move that we can calculate on a weekly or monthly or any time frame? On that basis, we calculate a weekly time frame here. So that gives you an expectation of what's realistically possible. Anything is possible, I suppose. Maybe more so what's probable in terms of what to expect. This could change in a second, but we also look at where is that current implied volatility relative to where it's been over the last year, knowing that the implied volatility can change. But when I go through that process, or just looking at this here, we come up with a range of about 91,000 to 107,000. How do I use that? Within the bullish trend, because it's harder to short, you can do that, but I'm going to be buying dips. with the expectation being that all else equal, given the volatility that's being priced into the market right now, which is also going to be a function of what's happening. People respond in the options market and buy options because of what the price is doing, what they think the price might do. But because of that, we have an implied volatility of 61%, an underlying price, and an expected move. In that bullish trend, it's realistic to think that we could see, all else equal, price come down over the next week to around 90,000. Maybe it's 91, 92, maybe it's 89, but that's kind of the bottom of that range. And then there's a high probability we're back up to where the all-time high was. I buy it at the bottom of that range. It's not, fire everything in one shot, but you might add to a position there, and then you might lighten that position up or sell some at the top of the range. This gives you a way to really understand what's probable over certain periods of time. Helps to frame things or put it in perspective.
No, I love this. So for a week, I can just, at a quick glance, like, all right, I should be planning to buy around 90-ish and selling at 106, just realistically. And if it happens, it happens. If not, no harm, no foul.
Yeah, I think at a glance, this gives you, again, a sense of kind of where we would likely see, unless something changes, where price is going to trade. You can get that coincidentally when you look at a price chart. The range for Bitcoin has been 90 to 110. So no surprise that that's what the market is pricing in with a high degree of certainty, at least within one standard deviation over the next week. Over a longer time frame, that range is going to be much wider. On a yearly basis, the implied volatility is 61%. So just take 61% off of the current price, and that's your range, both that amount up and down. And so when you see tokens that have 100% implied annualized volatility, that means that if it's an implied volatility, the market is pricing in the expectation that this could double or go to zero in the next year. That's how volatile it is. But it's important to understand that on smaller time frames, or how can you use that on smaller time frames, because there is premium priced into the options market, but it's a pretty accurate reflection of market expectations. And quite often, that's how prices respond. If volatility goes up, that range widens. That's also a signal. And we know with crypto, quite often volatility increases as price increases. So I would look at that as a bullish signal or further confirmation of the trend continuing. I say all of that, and we're going to run out of time per usual, but these things all work together. It's kind of like you're driving in the car, and if you're racing, yes, you want to race and win the race, but maybe you just want to get from point A to point B. Ultimately, you don't want to crash when you think about risk management. This is your dashboard. It doesn't mean that you're not going to crash, but tells you how fast you're going, whether your lights are turned on, what gear you're in, the RPMs, you name it. There are other factors. It could start raining, obviously, but when it does, we recognize that, and then we make some adjustments. That's how I use this information. This is probably, beyond just staying on the right side of the trend, I think the weekly expected moves and the volatility analysis is probably, to me, the most valuable piece of the process.
I love it. And so, especially for setting up liquidity pools, do you use these weekly expected moves, or do you look at a larger time frame?
I do. That's a great question. We have talked quite a bit about ETH USDC liquidity pools on Uniswap, setting the range. That's exactly right. I'll look at the underlying price, and now you can tweak that volatility as the input. So we know that the ETH implied vol is 71. Its actual 30-day realized vol, annualized, is 62. So that's where you get the premium from, just as a quick aside. Market's implying 71% annualized vol based on option premiums. In reality, in the last 30 days, the thing has only moved with a volatility of 62% annualized. So you're paying a premium to buy that option or that volatility when we think about ETH. But yes, you want to look at the spot price, take the implied volatility, and that'll give you the expected move. And so when we look at ETH, if I'm going to set up a liquidity pool, I might, at the current price, consider setting this up at 3,000 on the downside and 3,700, 3,600, somewhere around there on the upside. if I believe that volatility is going to increase, or I just want to create a range that would reflect volatility in the marketplace of, say, 80%, I would just use that as my input. And we have a lot of tools and calculators that are available through Tasty Live, some things that we'll expose on the Tasty Crypto side too, so people can use their own volatility inputs, but that's how you would think about it.
Love it. Do we have time to cover the correlation?
Yeah, we do, because that's kind of at times another important piece. And with this email, anyone that's going to start to receive this, we're going to add a bit more to it. We've got a lot of different charts, and we'll mix things up on a week-to-week basis. So it's not always going to be the same, let's say, stale correlations. Sometimes it wouldn't make sense to put these things in there if they don't change. But here's why this might be relevant. Quite often, crypto does its own thing. Bitcoin does its own thing, and that's certainly true over longer periods of time. But when you have pockets of volatility in, let's say, risk assets that are driven by macro factors, maybe it's the Federal Reserve changing an interest rate or people's expectations of that not being met, whatever it might be, you're going to see all assets kind of react in kind, and volatility especially downside volatility results in periods where everything kind of moves together. And so your correlations strengthen. And that's what we've seen recently. If I look at a yearly period or a 3-year or even since inception time frame, and I look at the correlation between, let's say, the S&P 500 and Bitcoin, it's not much of a correlation. Maybe 30% of the time on a daily basis. If we look at each day over that period of time, they're moving together. Not much of a correlation. But at points in time where you have more volatility in the market, everything sells off together. You need to be aware of that. It could present potential opportunities if things are simply just going lower because everything is going lower temporarily. Maybe there's a reason to buy Bitcoin. Or if they're all going down together for a real reason, there's a financial crisis or something. Maybe there's a reason to stay out of the market. I don't know. But you want to be aware of just what's the relationship between the price performance of Bitcoin, in this case, and what's happening elsewhere. And when we look at this, it doesn't mean when I see something like 0.56 for the S&P 500, think about that as 56%. It doesn't mean that they're going up together. It's just that they're moving in the same direction a slight majority of the time. The strongest that we would see would be 1.0 or 1. The inverse of that being -1, perfectly inversely correlated, where if Bitcoin's up, the S&P is down every single day, or vice versa. That's not what we're seeing right now. And so these will change. There will be a lot more noise, obviously, in the shorter time frames, the 15-day and 30-day periods. But it's just, again, important to be aware of, is Bitcoin moving in lockstep with everything else because of something that's happening or not? In this case, what we saw recently was that volatility had popped, and the view that we had on the show on Monday was if this turns into more of a trend and we don't see a bit of a breakdown in the volatility here, just given how things have traded, we probably would see more weakness in the market. Well, they're still moving in the same direction, but what's causing the market to go up here post the inflation report this morning, largely what we're seeing the response in the market to, is a positive move, and they're all moving together. But we are seeing that volatility come down a little bit, or the inverse correlation with volatility come down.
This is all really cool tools to have in the toolbox. So everybody can just get these weekly now?
Yes. We're going to send this out every Wednesday. So if you're on the Tasty Crypto newsletter email list and you've been receiving next to Orange, you'll get this on Wednesday. We don't really have a great way to get you off the list if you don't want this one, but you want the other one. I guess just ignore it or delete it for now in your inbox. But hopefully people find value in this. And if anyone has any ideas or anything they'd like to see here, we can expand the range or the list of tokens where we're coming up with the expected moves. We're going to focus on a lot of different areas of the market, but a couple places to start with today and really talk through that market awareness piece. I know there's a ton there, and we'll keep discussing this, but it will help with how we show some of these charts and how we're thinking about some of the moves that we're seeing in the market.
So for free.
Yeah, for free. We
all these
put it together. I use this in my own trading personally. And again, just to be on the right side of kind of the move. It's not a way, you're not going to time the market perfectly. These things are fluid. Some news could come out in an hour that could change anything or everything, but it's a pretty good dashboard to use to just be aware of what's happening.
Well, I love it. Thank you very much.
Yeah. Thank you for coming on the show.
Yeah.
I know it goes by quickly.
It does. Too fast.
Yeah. We're going to switch things up going forward, though. Katie's still going to be on the show on Monday, but I think everyone will hopefully enjoy what will be more of like a live stream. We're going to be trading. We're going to be talking about different things that are happening in the market or kind of in the space, in the news, but it's going to be a lot more fun, less of some of maybe the education we've tried to do before, but we are launching a new show on the Tasty Crypto channel that you're going to be heading up. So excited about that.
I didn't know we could share that yet.
Well, I guess we just did. Yeah. We've got more. Well, I think we've said there's a lot more content coming soon.
Yeah.
So excited about that, starting with this market update. Get on the Tasty Crypto email newsletter list right there in the chat. But that's going to do it for our show. Again, Shelley, thank you for coming on. We'll be back with you next Wednesday.
Thank you for having me.
And thank you all for watching, showing up in the chat. Nice to see everybody. We'll be back on Monday with Katie. Until then, I'm Ryan.
I'm Shelley.
Peace.